Hello, everyone. Professor Kurzluck here. So, late last week, the United States issued a temporary waiver allowing certain shipments of Russian oil to reach global markets. So, since Russia's full scale invasion of Ukraine in February 2022, the United States and its allies have tried to limit Russian energy revenue through sanctions and through global price caps on Russian oil. So, why then would Washington temporarily allow Russian oil to continue moving through the global energy market? So the answer has less to do with the changing policy towards Russia. There isn't a peace plan coming about for Russia's invasion of Ukraine. There's not progress being made on that front that we are reading in the newspaper. Instead, it has more to do with stabilizing and more to do with the stability in global oil markets during this recent period of geopolitical uncertainty brought on by the conflict in Iran. So first, it is important to understand why the policy change, what the policy change actually was. The U.S. Treasury issued a short-term sanctions waiver lasting roughly 30 days that allows certain Russian oil shipments to complete their delivery to global buyers. However, this is not a full lifting of sanctions. This is not walking away from the sanctions regime that the U.S. has put on Russia. Instead, the waiver primarily applies to oil cargoes that were already loaded onto tankers in moving through the global shipping system when sanction restrictions took effect. So, in other words, these shipments were already in transit and effectively stranded in the market because financial and shipping restrictions made it difficult for them to complete their sale. So, the waiver simply allows these specific shipments already underway to reach their destination. Again, it is not a complete reversal of the sanctions package that the U.S. has put on, that our allies have put on to Russia since their full scale invasion. Sanctions on Russian energy exports do remain in place. The price cap on Russian oil is still active, and the waiver is temporarily and narrowly targeted. So, this decision, again, does not represent a complete change in the overall sanctions policy towards Russia. Instead, it is a technical adjustment meant to manage a short term disruption in the oil market. That doesn't mean that it won't still help the Russian economy. We know why sanctions have put on Russia to try to hurt their economy, to try to change their policy towards Ukraine, to try to make it harder for them to fight their war in Ukraine. So this isn't walking away from that policy, but it will create a short-term economic, a better economic situation for the Russian Federation and their ability to fight the war in Ukraine. But again, it is just a temporary change of policy. So the timing of this waiver is maybe not surprising. It is coming at a time of concerns about global energy supply, global energy prices. We know that the recent instability, the recent conflict in the Middle East has raised concerns, has raised fears about potential disruptions to oil production, to oil shipping. And as we talked about last week, one of the most important areas for global supply is the Strait of Hormuz, a relatively narrow, 20 miles wide, at its narrowest, a pretty narrow shipping lane, which roughly about 20% of the world's oil supply normally passes. So, this instability in the region is creating shocks in the oil market. And we see oil prices going up. Average citizens are seeing this when they go to the gas station, when they drive past a gas station, they are seeing a spike in oil costs, a spike in gasoline costs. So why we're seeing this now is trying to mitigate some of the economic ramifications from the conflict in Iran, trying to slow down the price increase in energy. So we're also seeing some countries tapping into their petroleum reserves as a way to get more oil, more gasoline on the market to try to bring down the price of energy. So when we think about, okay, why now? Why this 30-day waiver? It's not because we're seeing a breakthrough in peace negotiations. Instead, it is just a response to the conflict in the Middle East and showing how interconnected, as we talked about in a video last week, how interconnected one policy decision to bring about conflict in the Middle East has downstream impacts. And we're seeing that Russia may benefit from this, at least in the short run, as now they can sell some of their oil back onto the global market. Okay, I just wanted to make a quick video because we had talked last week about how the Iranian conflict might actually be benefiting Russia. And then late last week, we saw this announcement from the Trump administration that they're pulling back, at least temporarily, some of these sanctions. Thank you.